Hey traders, Raghee here, and in this recap video I'm going to cover a trade from this morning that was an alert, and I hope it's going to be a really good explainer video where you can get an idea of just one of the morning tactics that I use, and this one is the clearing range exhaustion, or the opening range exhaustion. And clearing an opening range exhaustion, it's just really a way of saying, what can we glean from the first 30 minutes of the day after the Wall Street bell rings, project some lows that would be exhaustive lows, aka support, and look to buy off those levels. So this morning, using the clearing range exhaustion projected lows, we had lows sitting down at 1693. We had lows at 1690 and a low at 1687. Now, all three of these are potential support levels or exhaustion lows that I'd be looking to buy. Now, the deeper the correction, the more exhaustive it is, or the shallower the correction, the less exhaustive it is, but it's a range of support. In this case, you can see just under 5 points, all right, which is not a lot for the Russell. Now, I don't say that randomly. When I say it's not a lot for the Russell, realize the opening range, or the opening hour, so 9 to 10 a.m. Eastern, can have ranges of 6.5, 9, and 12 points. So when I'm talking about less than 5, it's relative to that hourly price movement range between 9 and 10 a.m. Eastern. So I'm waiting for the market to come down and tag that level by about 10 o'clock, all right? And you'll notice we came down and hit 93. We hit right there 90.3 even, which means this level right here, the first two, were hit. So this one got hit, great, and so did this one, terrific. It left the last unfilled, no problem. It gave you an opportunity to benefit from an extreme range extreme low. And then from there we get long. Now, we posted this. Basically, we post this before, obviously, otherwise it wouldn't be an alert. But we post this as soon as we have confirmation of some sort of high. And I'll usually wait till just after 9:30 to start projecting these. So we might have a couple different times that we're projecting it. But once today we put the high in and started, once you put that minor high in and sold off, we never did put another high in for that window of opportunity. So it kept the maintenance of this pretty low, which is great. You want to see the market puts in that minor high and then starts that exhaustion correction. So this is really what we're looking for. And then on the way back up, there's some really simple levels for management. I mean, the first level is just looking at sort of what the high on the morning was. You realize that we have a 1700 level, a high and a minor high in that area. So you want to realize a profit before we get there. We have a saying, get out while you can, not when you have to. And that means we take some profit here, and then we look to see how much higher is high. And it really wasn't all that much higher. So when traders say, oh my gosh, I might have left maybe 2 or 3 points on the table, I'm okay with that. Because I don't want to play the musical chairs exit where once the market finds the high and then sharply starts to sell off, it's me and everybody else scrambling for a seat in here. I don't want to do that. I'd rather get out with calmness in that area and then see how high is high. So think about that the next time you're looking at your exits in the morning. If you're playing that range extreme exhaustion, use sometimes levels like the range extreme high as a profit target. And in this case, it doubled up with a major psychological level. Fantastic. That's the kind of exit we're looking for. And then here's the thing. Once I buy something like this, realize that I'm not sitting through all this, right? No way, no how. So what I want to then do is start thinking about, one, at worst, a break even. So all I'm doing is risking unrealized profit on now a smaller position. Or two, we can start transitioning to a trailing stop, which could use, say, a -6, or even, the same hourly price movement ranges. We could use a -6.5 or -9 trailing stop. So there's a number of things that you can do, or even previous Darvis levels. And if we dip back down below that, we can keep a very tight trailing stop. So there's a lot of alternatives. Not one size fits all, but knowing how to recognize these levels and knowing which one means the most to you, That gives you flexibility to become the kind of trader you're wired to be and not sort of pigeonhole yourself into following a trader or a style without sort of customizing it, because that's never going to lead to success. There's got to be flexibility, and this is how we do it. See you in the next update.